We're very excited for this unique event with John Paul, whose topic for today is the one method needed to trade independently. Please join John for an exciting event covering the advantages of day trade to win. Thank you all again for your attendance today. Without further ado, it is my pleasure to welcome the NinjaTrader webinar room, John Paul of Day Trade to Win.
Just do a quick sound check. Again, just making sure that you can hear me loud and clear and that you are able to see my presentation today. All right, thanks, Brian. Luigi, great. Fantastic. All right, as you know, I try my best to avoid all other type of indicators like moving averages, bands, and things like that. And I really want to try to concentrate on looking at price action. So today's presentation, we're going to cover a very important tool that I use in telling me what the market expectations are. It's a free tool that NinjaTrader actually has in their indicator list. And I'm going to go over it in detail. I'm going to show you how I use it and why I think everyone should be using it as well. There's a few things before I start in case you don't know anything about DayTradeToWin.com. I do offer free videos on how to trade. So if you're interested in learning about how I look at the markets, how I take price action into a different style of thinking, I invite you to download the 3 educational trading videos. You can go to DayTradeToWin.com and you can absolutely get them for free there just by putting your email and your name. I also want to introduce something pretty new. It's a news indicator that is applied to your chart, and it's located on free downloads on the Day Trade to Win website. So I'm going to go over that as well. I'm going to show you how that works. I'll be discussing a little bit about currency trading versus E-mini trading, and there is a new 8-week mentorship class starting on Thursday, tomorrow. So if you're interested in learning and spending 8 weeks on how I trade the markets, it's an all-inclusive, and I'll go over that in a little bit more detail as well in case you have any questions. I typically like to conduct these webinars as informal as possible. So you don't have to wait until the end of the presentation to ask your questions. If you have any questions on anything that I'm showing you, anything that I'm doing, definitely type it in the box. If I see it, I'll answer it. That way, if there's anything that I'm explaining that is not completely clear, you can go ahead and get your answers right away. Okay, I think that's important. All right, to start off here, a little disclaimer. Obviously, we all know that trading is risky. If you have an account and you have risk capital, fantastic. But please do not trade with funds you cannot afford to lose. This is obviously very important. And if you have any questions on trading, please email me directly. If you have any questions on this disclaimer, please email me as well. All right, so again, today we're going to cover if you're a beginner trader or if you're an advanced trader, and typically what the difference is between a beginner or an advanced trader. I speak to traders every single day, and I hear pretty much the same stories as far as I'm a beginner, I want to learn, I'm an advanced trader, I want to take my trading to another level, or I'm trading right now but I don't know what's happening, I don't understand what's going on. And so I'm going to explain how there are differences between a beginner trader and an advanced trader, and how Day Trade to Win can show you which direction to go into. I'm going to show you a little bit about news events, how to make the most of a news event. If you haven't seen the method on how I trade the news, you'd want to stay and watch this, because this is a great way to capitalize on news events. Okay, it's an actual method you're going to learn. We're going to be discussing the differences between currency trading and E-mini S&P trading. Obviously, they're not the same. Trading currencies, euro, Australian dollar, the pound, the yen, the Swiss franc, they have different characteristics. They're not the same market. So we're going to discuss how they're different and what you should be trading as far as either E-mini or currency. I'm going to show you how to identify a trend early. Hopefully we have time for that. It's a different way to look at the market, and I'm probably going to go into a little bit deeper thinking about taking that same concept and looking at what's currently happening in the summer months now. I'm going to explain to you the tool which I think every trader should be using, the #1 tool that I use every single day, and I'm going to show you how and why you should be using it. And don't forget to download the free indicator for the news, as well as the educational videos to help your trading. Additionally, because I love NinjaTrader, it's absolutely the best platform out there. So I want to thank Ryan, Ray, John, Dan, everybody at NinjaTrader for the great work they do and the great support they have. I want to give a small 10% off any purchase off the DayTradeToWin website. Again, I want to thank NinjaTrader for having me here today, because I think their platform is fantastic, and I definitely encourage you to use it and learn it. There's so much you can do with it. Alright, so let's talk a little bit about what type of trader you are, or currently how you feel about trading, okay? And what DayTradeToWin can do for you as well. So first, let's talk a little bit about if you're a beginner trader. Are you a beginner trader who is trying to understand how the markets work? Well, we have a few options here at DayTradeToWin. The few options available are starting off with a DVD course entitled Power Price Action. And this course teaches you how to look at any market and showing you exactly what's happening, what to expect, and what to do. It also comes with 8 weeks of training, which I think is very important. There's also an all-inclusive mentorship program. And that is all-inclusive because it includes the Trade Scalper, the At the Open, the Roadmap, the Atlas line, all the software, all the licenses. So the new class is starting tomorrow. If you have any questions that you'd like to join, please send me an email, or you can call us and answer all your questions on that. So if you're a beginner trader, you have an option of starting out with the Power Price Action DVD course. If you're getting back into the trading game after trying different indicators without success, this is very common, and you're not alone. Indicators generally don't work. And because of this whole curve fitting optimization, you can see that you can look at history, and you can have an exact value such as a 10 moving average or 20 moving average, or whatever the case may be, and it'll work in history, but moving forward in time it will never work. And so if you're used to looking at all indicators on your chart, trying to make it all work based on history, when you go further into the future it will not work. Okay? Alright? Now, price action, such as the At the Open method, or the Trade Scalper, or the Atlas line software, the Roadmap, it doesn't have any optimization. It is the price. It is what it is. And therefore, if price goes up and we have some evidence and some proof that tells us price is going up, that's all I need. So we don't have to make trading difficult. And I definitely do not advocate using any type of indicators. Now, if you're an advanced trader and you understand the basics, but you yet are still looking for that level of consistency, well, there's a solid foundation, and the next step is definitely looking at the mentorship program, because there's manipulation that occurs in the market, and I teach this manipulation with the Roadmap and the X5, showing you exactly why, more importantly why, and an understanding that the market is changing, or there's buyers that are stepping in or sellers that are stepping in for a specific reason. So if you want to learn how this manipulation works and you have a basic foundation of trading, the mentorship is an excellent way to continue. All right. Now, I want to make sure that everyone can hear me properly, so if there's any sound issues, let me know. Now, if you are following a trading room, but you can't be consistent on your own, this is an issue that when I talk to traders, they have where they really can't do it on their own, and they can follow somebody by just, okay, buying and selling after the fact. But using a trading room to learn to trade is typically not the best option. When you're on your own or you're not following someone in a trading room, you have to be able to do this on your own and be independent. So definitely a key aspect, I believe, of trading is the independent part. And following somebody in a trading room, I think, is very difficult to do on your own. So mimicking other traders is impossible, and you should learn on your own. Okay? Now, speaking a little bit about currency versus E-mini S&P trading. Okay? Currencies such as the euro, Australian dollar, Canadian dollar, British pound, all these currencies, they typically have a little bit more action, more volatility when compared to the E-mini. So when you look at trading a currency versus trading the E-mini S&P 500, which is actually the contract that I love to trade is the E-mini, there are some differences. Some traders like currencies, some traders like E-mini, but they're different. They are different. Now, you have to understand that different traders push these markets. So you don't have the same individual trader that is an E-mini trader trading the currencies. You have currency traders and you have traders that are financials or E-mini. They typically don't mix and match. Sometimes they do, sure, you can trade currencies and you can trade E-mini, but for the most part they're separate. So there's different players in the market, and that's why the markets act differently. Okay? But one thing remains the same. Price action is the only constant. So if you think about either trading currencies or trading E-mini, currencies being more volatile, E-mini lately being definitely slower, you really can't apply the same moving average or the same indicators or the same stochastic or whatever, because they're different markets. But the one thing that is exactly the same is price action. So remember that the price action, either up or down or double bottoms, double tops, and flags and all this stuff, it is the same on both markets. Okay. Now, I don't teach any of that. Just so you know, I don't look at flags and double bottoms, double tops, or Fibonacci's. I don't do any of that. I look at price action a different way. Now, on the E-mini S&P, typically traders look at points. Okay, they are not really associated with ticks. On the currencies, it's always about ticks or pips. Okay, so when you compare an E-mini with a currency, they are essentially the same when it comes to looking at 4 ticks equals a point on the E-mini, but you can't say the same with a currency. Everything is by ticks or pips. All right? Now, a big deal here is what currency you should be trading if you want to trade currencies. Okay? The British pound is only $6.25 per tick. The euro currency is $12.50 per tick. Now, personally, I don't think the British pound, even though it's a fairly stable market, I don't think that every tick being $6.25 after commissions is worth trading. And so you have to know what the different tick value is for each of the currencies. They're not the same. The E-mini is $12.50, just like the euro currency, and the Canadian dollar is $10. And so they are different, and if you don't know this, you can be in a lot of trouble because you may be thinking that it's worth a certain amount and it's actually not. So when it comes to currency trading, all currencies are really not created equal. The E-mini being worth $12.50 a tick, just like the euro. The British pound and the Canadian dollar are a little bit different. I also like the Australian dollar, by the way. I also like the Australian dollar. It's a good market. The one market that I really shy away from, and you've probably heard me say this in the past, is the Japanese yen. I think the Japanese yen is, in my opinion, a little bit too erratic to trade. There's a lot of gaps on it, and it's not very consistent. So if any of the markets that you are thinking about trading, I would say stick with the Australian dollar or the Canadian dollar, the euro, but I wouldn't recommend the British pound or the Japanese yen. All right, I spoke a little bit about calculation in ticks versus the calculation in points. You have to know that there's a difference there. And the reason why I'm bringing this up is because later in the presentation, when I start talking about the ATR, this tool that I use, you can't use a point value system on currencies. You have to use a tick value system on the ATR. Now, the time difference compared to the E-mini and the currencies are different. And the reason why I say this is because currency traders typically push the market when I'm asleep. I'm in the Eastern Standard Time Zone here in Florida, and when I'm sleeping, the Life Exchange in London starts trading. Locally, it's 8 o'clock in London. It's 3 o'clock for me here in the States, and I'm asleep, but yet you have a huge amount of currency traders that are pushing the market. So there's a time difference. And the reason why I bring this up is because if you are international, you have to know when it's the proper time for you to trade. And if you're in the stateside, I don't expect traders to wake up in the middle of the night to trade the London Open. I have a lot of Australian clients that I talk to, and for them it's a little bit difficult to trade the E-mini because it's midnight, pretty much 11:30, 12:30 locally in Australia. So it's in the middle of the night. So for them, they want to have a market or a currency that they can trade during the daylight hours. Okay. Now, manipulation is a big deal. Okay, markets go up and down, and they're not random. They are pushed either up or down. And the way I like to describe it is when a big, and this is actually goes along with the commitment of traders. If you have any traders that used to look at that years back, you have buying and buying and buying and buying occurring, but when it's time to unload those positions, typically they unload a lot more contracts at the same time, and that creates a flood of orders that stops the market in its tracks. And you have to know where this manipulation occurs, or else you're caught off guard. So the manipulation aspect that occurs on the E-mini S&P is completely different than the manipulation aspect that occurs in the currencies as well as the Forex. So you have to understand on the differences between when the E-mini trades and the currencies trade, as well as the manipulation that occurs within the players themselves. Now, the one thing about Forex that a lot of traders do not know, and I think it's important to know, is that if you are trading Forex, think about who the opposite side of the transaction is. And a lot of traders don't know this, but it's actually your broker. So if you do trade Forex and you're thinking that you're trading against another trader, typically you're trading against the house. Okay, and so that's an important aspect to know if you're a Forex trader. I'm not a forex trader. I'm a futures trader, the E-mini S&P, and that's what I really concentrate on. And so when the opposite is taken, when I place a trade, it's a zero-sum game. I'm trading against another trader. Okay, now I want to talk a little bit about trading the news and trading the news wisely, okay? Because many traders do not know what to do when the news event comes out. They start bracketing, right? They say 2 points above, 2 points below, where the market's currently trading, something along those lines. If it pops, I go long. If it drops, I go short. All right, sounds good, right? Why not? Sounds like it would work, right? If the market continues through the move, you know, you've hit gold. But it's not always like that. Sometimes it is, but what you usually have happen is you have a pop, or you have huge chaotic movement where it goes up 3 or 4 points and then goes down 5 points and it goes back up 5 points. It's very difficult to get a handle on all of that chaos. So I have a different take on how to trade the news, and I'm going to show you that. I'm going to teach you that today. So first thing, I have a news indicator that plots right on your NinjaTrader chart, and you can download it for free at DayTradeToWin.com under free indicator downloads or free downloads, or you can copy that that address. You can go right to the website there. I'm going to show you how that works as well. What I want to first start off with is preparation. I want to be prepared for high impact news or reports. Okay, so whenever there's a report that comes out and it's high impact, right? It's not anything that doesn't move the market. It could be PPI, it could be FOMC, it could be housing, unemployment. Those are significant reports that come out, and typically traders wait for them to come out and then they buy or sell based solely on that report. So the first thing we have to know is be prepared for when these high impact news and reports come out, because if you're not, then you're going to be in trouble. Okay, you're going to get caught off guard. Now typically, not always, but typically they occur at 8:30 Eastern, 10 o'clock Eastern, as well as 2 o'clock or 2:30 p.m. Eastern, 1400, 1430 Eastern. This is typically when you have economic news reports being released. Okay, so they are on all different days. They're not every day, and if you have this news indicator on your chart loaded, it updates automatically, and you can see, and there's an alert and all this stuff for it, and I'm going to go over that in a second. Now, one of the things that is not considered a high impact news item is when Bernanke speaks. Okay, when Bernanke speaks, when the Fed starts talking, people listen, and he may say something that can ruffle some feathers, and the market can act very chaotic. So on top of any high impact red flags or red news reports, always also look for when Bernanke speaks. Okay, sometimes it's not listed. Now, to start off, I want to close any positions just as the news occurs. That means that I do not want to be in the market. I don't want to be in a trade. I want to close it out. Okay? I want to have a clear understanding of what to do. I don't want to get caught up with the chaos. So close out all your positions. The next thing we're going to do is we're not going to follow the initial move. I want to expect the chaos to occur. So if the market starts to move up 10 points, I'm not doing anything. Okay? I'm going to sit it out, I'm going to wait. I'm going to expect the chaos to occur, but I'm definitely not going to follow the herd. Okay. Now, I only take action with an objective set of rules. And instead of just hitting market button or the reverse button, I want to have some clear thought before I do anything. So you have to have an objective set of rules, which I'm going to show you, before you take any action. You have to know what's happening, why you're doing it, what's going on. All this is very important. Now, the news method I'm going to show you is not just for the E-mini or for the Russell or for the Dow. It can really work on currency markets as well, because when a news report comes out in the States, it impacts the currencies as well. So it's not as if we're just going to look at only E-mini S&P. The news event can absolutely, or this news method I'm going to show you, can work on currencies as well. Alright, so what I'm showing you here is the news indicator that you can download for free, and I'm just going to go over what each of these parameters mean, not in great detail, but to briefly explain this, the news indicator can access not just US news but also European news. So if you're looking at some European economic report that's of high importance and you're trading the euro, definitely know when it's occurring and be prepared and use the method that I'm going to show you to trade it. You can also have a high priority or low priority or just high priority, and I have it set for me. I don't really care for the low priority because there's a ton of reports that come out every day and they don't really impact the market. But high priority events that move the market, that's what I want to look at, and so that's how I have it configured on my end. Sound alert. You have a sound alert just before a news event comes out, just to alert you not only that the news event's happening, but also what that data was. Now, we're not using that data, so I'm not really interested in to know if it was better than expected, less than expected, if we had 2 million jobs created out of nowhere, although that would be a great thing, right, under these current economic conditions. But it actually tells you as well, right on your chart, printed on your chart, what the report or what the value of the report is, okay, positive or negative. You can also have as many news items listed, and I think defaulted there are 10 or 20 that are displayed in your chart, and you can change that. So I don't have it set to display that many. I only want to see the most recent 5 or the most or that are going to occur into the future. I don't need to see everything in every country and all that. So you can definitely optimize how you want the news sent to you on your chart. Okay. And remember, if you go to DayTradeToWin.com, you can get this download for NinjaTrader for free. All right. Yesterday, okay, I was trying to finish up some recent charts. One of the things that I think I pride myself in is I don't show charts and examples that are 2 years old. I try my best to show you what the most recent action of the market occurred, because this is what's fresh in our minds. So I take you to yesterday. Yesterday was August 14th on the E-mini S&P, and actually on the top left-hand corner you can see the news indicator right on the chart. That's exactly what it looks like. And I'm not interested in the green reports. I'm only interested in the red, which are high impact. And I know that when they occur, I should be out of the market, or I should know when they occur, so I can take this trade. Okay. So looking at the chart yesterday, actually I did this in the morning. This morning there was a news event that occurred, yesterday morning at 8:30 Eastern Standard. Okay, and I didn't even write it down. I just quickly looked at it. I pulled it up and I saw there was a red star or red flag. And actually, I don't even care what the news event is. I just want to make sure that I know that a high impact news report is coming out. So we had a news event yesterday. Okay, and first thing I said to you was know when these news events come out, because if you're trading along and you're you can see here the market's going down and down and down and down, and you wake up, you're making your coffee, and your moving averages all tell you, hey, it's time to go short, and then all of a sudden this happens. You said, well, where did that come from? Well, you definitely have to know when a news event comes out, so you're not caught off guard. Okay, so a news event came out, and whatever the news event was, it was a bullish reaction. So the report came out, and let me ask here, Chad, if you can do me a favor and find out what news event occurred yesterday at 8:30, please, so I can let them know. Thank you. So what happened was the report came out, and everybody bought the market, right? And obviously they bought solely on this economic data. Okay, now how I approach this is different than what most traders do, because I look at this and I say, you know, this is a buying fiesta where everybody just starts piling on because they think there's a correlation between a positive news event in the market going up and a negative news event in the market going down. And therefore, they look at this as a way to substantiate jumping in the market. Okay, it was PPI, Producer Price Index, and retail sales. So there were two indicators at the same time at 8:30. Okay, so there were, thank you, Chad. There were two indicators, or two news events that occurred at 8:30 Eastern Standard, and that was the result. Okay, so PPI and retail sales. Okay, so the news event was a positive news event, and we have a lot of traders that bought the market for that sole reason. Now what? Now you do nothing. You do absolutely nothing, because the correlation between a positive news event, or news economic report, I should say, a positive economic report, and the market going up, or a negative news report and the market going down, it's not 100% accurate. We can't say that the market will definitely go up because of this report, or definitely go down if it was a negative report. So that correlation doesn't work. Okay. So if you want to see what really happened, this is what really happened. See? So there is the chaotic news event that I expect. So I'm not trading, and you have initial buying based solely on this news report, and there is the result. Okay, there's the economic event, and the market went down. Okay, so how can we take advantage of this? Okay, well, I'm going to show you. The first thing I want to do is I want to reference if the candle that was chaotic was a bullish or green bar, or a bearish red candle, red bar. So I want to see what the initial reaction was. Now, if it was a doji, we do nothing, because a doji is a term to reference a candle or a bar that opened and closed on the same price. So I don't know if it was a positive or a negative reaction. It was flat. But if we have a clear direction, and it could be as simple as, was it a green bar or was it a red bar, this will absolutely set this up. So in this case, it was a green bar, a bullish reaction, bullish chaotic move. Now the market did the opposite. Okay. Now how do we handle that? Well, what I'm going to do is I am going to reference first, if this is a green bar, I'm going to take the low of that green bar, and I'm going to wait until price breaks that low of that green bar. And I'm going to explain to you, I can give you rules and show you how this works, but I want you to understand the whys behind it. Okay, I think with trading, I think that's much more important to understand the concept behind what you're doing. It's got to make sense, right? So when it starts to trade below the low of that green bar, I want to do the opposite of what everybody else did. I want to sell it. I'm going to wait for an objective setup to tell me when to go short. So first, we wait and see if the opposite occurs, and I want to sell it instead. A panic in the opposite direction is very likely to occur, and I'm going to get to that in just a moment because I think that's important for you to understand the concept. I wait for proof. I wait for 2 consecutive candles to close below the low of that bullish, green, chaotic news bar. Okay. Now the opposite is true. If this was a red candle or a red bar, I would instead look to buy the market at the high of that red chaotic candle when 2 consecutive closings occur above it. Okay, so the opposite is true if that was a negative response, a negative initial response. I'd look to buy the market. So let me explain to you what happened yesterday and what happens all the time and how you can take advantage of this and why this happens. First, if you look at the mind frame of what's happening with the traders, they took a news event and they bought the market based only on that news event. And then a few minutes later, maybe half an hour, maybe an hour later, actually, there's no time limit. It could be any time throughout the day. You're going to have traders that are holding on to this position and the market starts to go against them. And so what do? Well, there's only one thing they can do. Their stops are going to be hit, and even they're going to hit the reverse key. And what happens is a flood of orders in the opposite direction hits. Okay? And when that occurs, you have, as you can see, this huge red candle here displaying that. Okay? Displaying that. Now, I'm not ready to go short yet. I want more proof. So 2 consecutive closings tell me, and some traders even tell me, John, I like when just one closing occurs so I can go in. I say, that's fine. If you're comfortable with that, if that's enough proof for you, by all means use it. But I like to see 2 consecutive closings telling me that this is going in the opposite direction, and I jump on board. Okay? Now, the reason why this happens, for everyone to have a good, clear understanding, is maybe an hour later, maybe 3 or 4 hours later, things change. Oh, that news wasn't that good. Or some other news comes in and says, well, you know what, things are actually worse, and this economic report had no impact on the overall market conditions. And all those traders that are long, they have to do something. And unfortunately, I'm taking advantage of their stops, and I'm using that as my evidence and my proof. Okay? That's right. If you're using a 5-minute chart, James, thanks, Walter. Waiting for 2 bar confirmation. That's 2 consecutive closings on a 5-minute chart. That would be 10 minutes. That's correct, 10 minutes. Yeah, 10 minutes. So at the close of the second candle, right, this would be candle number 1, the first closing. This would be candle number 2. At that point, you're in short. Okay. Anyone else have any questions? Okay, very good. I see. I wouldn't recommend, James, having any type of outside source to kind of cloud the judgment. What you see is what you get, right? What you see is what you get. So the candles and the price, where it goes, how it reacts, that's the only evidence. It's the price action, right? I've seen so many times when it was a positive news event and the market went down, it was a negative news event and the market rallied. You really don't know, so you can't have that correlation. And this is a way to capitalize on that. Okay, let's talk about stops. Let's talk about profit targets. Okay. First, I'm going to use. See if I can bring this up here. Hold on a second, guys. Okay. So first, let me just bring up my chart. It may be a little bit easier to show you here. 814. Okay. So first, here's the news event right here. Okay. And here's the low here. Okay. So I'm waiting for any time throughout the day 2 consecutive closings occur below that green bar. Okay. I have to wait for that. All right. Now, my profit target is going to be based off the ATR, which I'm going to show you in a second. Okay. That's my initial profit target. And typically with these news events, you can go much more than that, but I want to just basically, and I'm going to go over this in a second, I want to take what I can expect. Okay, so when this does trigger to go short, I want to take a look at the average true range. Tell me how much profit. The stop is going to be if price closes back above what I'm calling the means, the low of this candle. If price closes back above it, I am going to get out. That's proof telling me it's not ready to go short. So I'm using the low, the price of 1405.75, to tell me whether or not we have to get out of this if it comes back up, and I'm using it as proof to get me in as well. Okay. Okay. Now, the entry, I forget who asked here the question. Where's your stop? Okay. My stop is going to be the first close back above the low here. Okay, 1405.75. I enter at the actual close dawn of the second bar, not the low, for example, right? So the low is 1405.75. I want to wait for the 2 consecutive closings below it, right there. Okay, we're not entering at the low. We're not entering at the low. Waiting for more proof than that. Okay. Now the opposite is true. If this was a red candle, I look for 2 consecutive closings to post, and then I'm going long. Don, is that clear? Okay. Anyone else have any questions on this? All right. Good. Good. All right. All right. So let me move my chart here out of the way. Okay. All right. Now, let's take a look at the #1 tool that I use on a daily basis for any market that you may trade. And I want you to be able to understand why I'm using it and why you should use it as well. I want to have an expectation of the current conditions before entering into the trade, right? I don't want to think to myself, regardless of what's happening, I want to take 5 points profit and a 5-point loss, or I want to take 10-point profit and a 10-point loss. I want to. It's not what I want to do. I really want to understand what's happening. Is the market slow? Is the market fast? Is the market chaotic? What can I expect if I enter into the market? What can I expect the market to do? And so I use this average true range. It's found in the indicator list of NinjaTrader, the ATR, and you can see it on my chart, and I'm using it with a value of 4. So I want to know, when is the market too slow to trade? When it's less than 4 ticks on the ATR, we stay clear. Okay. When is the market too volatile to trade? Well, when it's when the ATR is, and we're looking at the E-mini S&P, so it would be 5 or more, and that would be the equivalent of 20 ticks for the E-mini. Again, I'm using a value of 4 for the ATR, and you can go ahead and right-click. Once you change that from 14, it's defaulted from 14. When you first put it, you change the value to 4, because I'm only interested in the last 4 candles of the calculation. Okay. So I'm only looking at the last 20 minutes on a 5-minute chart to tell me what to expect moving forward. I don't really care about what happened yesterday or 3 hours ago. That's history, right? The volatility, either slow or fast, is in the past. It occurred already. I need to know what the current conditions are. So here's the problem where when I talk to a lot of traders, when I start teaching them this, this is how they come and they explain this to me. You know, I always want to take a 2-point profit, John. John, I always want to take a 3-point profit. And I say, that's fantastic. But how do you know the market can substantiate a 3-point profit? How do you know that the stop you have is too small? How do you know the stop you have is too big? Okay? You have to adjust yourself to the current conditions. And by using this ATR, the average true range, it can tell you what to do when you enter into a trade. Now let me give you another example. Okay? When the ATR is on the E-mini S&P at 2 points or 8 ticks. Okay, it's the same thing. 2 points, 8 ticks. And by the way, the average true range on the E-mini, on the Russell, it's calculated in points, not ticks. When you look at it in currency, it's calculated in ticks. Okay, it's the same thing. Every market works the same, no big deal. In oil and gold, I think it's in cents, or ticks, cents. Okay, if you have a 2-point stop and the ATR is at 2 points, the likelihood of the market moving up and down, here, let me show you here. The likelihood of the market moving up and down here, right, let's say that this is, we could take this example here. This is 1 1/4. If you enter into the market right here, short or long, it doesn't matter, the likelihood of this going up 1 1/4 or down 1 1/4 is going to happen. So if you have a stop that is 1 1/4, your stop is too tight based on the current conditions. Okay? So based on the current conditions, you can't have a stop that is smaller than the range of the last 4 bars. It just doesn't make sense. You're going to get stopped out prematurely. That's an issue that a lot of traders that I teach, I try to make that a point to understand that. I wish we could all have 1-point stops, but in trading, it just can't happen unless the market is slower than a point. Okay? Keith, I only use the value of 4. See over here, 4? 4 in the ATR. Okay, last 4 bars. Okay, same thing, Dell, with the Russell. No change. Okay. Well, a 4-range chart, I mean, it's already 4. You're looking at 4 ticks or 4 points. It's always going to be 4, so you can't use the ATR with a range chart, Albert. Right? It'll always be the same. the range, right? But with minute charts, it works fantastic. Okay, you can't use it with tick charts, and you can't use it with range charts. Okay, so have a stop that's slightly larger than the current ATR, or else you're going to be stopped out prematurely. That's the first thing. The second thing, traders want to know about profit targets. Well, profit targets are very important. So if you have a profit target of 5 points, do you see how slow this is? How in the world are you going to make 5 points if the last 4 bars could only range 1.25? I'm not saying it may not happen. I just think the expectation is wrong. You know that you can achieve 1.25 if you entered long or short. That's an exact target based on the current conditions. If the market's faster or more volatile, grab it, take more. If the market is slower, then absolutely take less. But you can't have a constant profit target and a constant stop unless you look at the current conditions. Great questions. Anyone have any questions? Any additional questions? Does that make sense to you guys? Guys and gals. Okay. So what you have here is a clear view of what to do. And this tool, I use it on any market. I use it on any time frame. It's always the same, works the same exact way. Now in currencies, it's a little bit different. So let me just go to a euro here, and let me show you how this works on the euro. Okay, you see this value here? If you can see it, the value is where we're currently trading at 0.000561, right? So what in the world is 0.000561, right? I mean, what is that? Well, when you have a tick increment, you move the decimal place over 4 places to the right. And that tells you how many ticks you should be trading, okay? Or what the current conditions are. So that's actually the equivalent of 5 ticks. And if it falls below, especially on the currencies, 5 ticks or 4 ticks, look what you have here. It's starting to just be whipsaw. This is a clear indication that we should not be trading. Okay? Whenever the market is this slow, know it and understand it. So for currencies, you move the decimal place over 4 places to the right, you have the equivalent of ticks. On E-mini, it's calculated in points. On oil and gold, you move the decimal place, I believe, 2 places to get the tick increment. I think it's 2 places to get the tick increment. Okay. So let me go back to the E-mini S&P to show you a little bit more here on this. Anything less than 4 ticks here, anything less than 4 ticks, don't trade. Okay. Anything less than 4 ticks, you know what you have? Whipsaw. Here's a perfect example. Take a look at what happened here pre-market, just before the market opened. You see the current conditions? Market can't even make a point within the last 4 bars averaged out in a range. Do you see what we see? Flip-flop, right? I can even go back here. See that? Look what you have. Chop, chop. So, no, not to trade. It's not worth trading. There's nobody there. If you want to play the support resistance channel game, by all means, go for it. But you can't make 10 points on this trade. You can probably go for 2 or 3 ticks every time it flip-flops like that. Okay. Ron, the ATR at the news event bar. Correct, Ron. So let's take a look at that news event yesterday here again. And let's take a look here. You're looking at the ATR when you enter. When you enter. When you enter. So this is what it looks like. This is the entry. 1404.50, point and a half is the expectation initially that I have. Ron M. Okay, so you're taking the profit target and using the ATR value of the candle that you entered on. Okay, Ron, let me know if you're good with that. Theo, so days without news events, how do you trade the market? I use price action based on candles that tell me, first of all, I look at manipulation. I look at specific rules like the at the open method. I use the Atlas line, the power price action, blueprint trade. I look at all of those methods are really what I teach. So besides the news, I look at price action trading. Okay. All right. Let me put this out of the way here. And I explained it on my chart, but here we have the ATR that's below 1 point. This tells me that I shouldn't be in the market at all. And it tells me when to stay out of chop. Okay. Luis, I don't trade from the chart trader because the chart trader is something typically for newer traders. I started off on the dome for a very long time, so my comfort level is to pull up a dome and just trade off the dome because I see the tick increments a lot clearer, at least for me. So I like trading from the dome, although many traders swear by the chart trader looking at it on your chart. Sometimes I have the chart trader up and I can see the horizontal lines as well. Me personally, I prefer using the dome, okay, because I have the ATM strategy there. I have, and if you've seen any of my videos, I have probably 300 or 400 videos out there of me trading. You can go to my site at DayTradeToWin.com and there's a ton of videos there. You can see the dome there, how I trade. Luis. Yes, Ron, the upper limit is 5 points, 20 ticks. When the market is that chaotic, you stay out. Okay? You stay out. To recap this excellent tool, the ATR, with a value of 4, remember that only the most recent current conditions are important. So forget about looking at what happened 3 hours ago. Forecast profits and targets. Okay? Forecast profits and targets can be used on any market, even Forex, right? And the Power Price Action DVD course is actually goes heavy into Forex and currencies and different times. And remember, you can this ATR, a value of 4, it can be used on a daily chart, weekly chart, minute chart. Okay? No time. Again, have expectations. Have expectations. This is the number one thing everyone should know before they enter into a trade, what the current conditions are and what you can expect to occur. All right, my time is winding down. You can get the free educational trading videos by opting in to the mailing list there. You get a newsletter, a weekly newsletter as well. The next mentorship class begins tomorrow, Thursday. If you're interested in joining, we have a nice small group, which I like. Email me or call me, and you get all the details. The DayTradeToWin shows you not just scalping, not just the Atlas line software or the DVD course on the power price action, but it's a method of looking at price. Okay, and if you do purchase any of the courses, please remember to use the coupon code to get 10% off. Okay. Anyone have any questions before I turn it over to Wesley? All right. I hope that I was able to bring a little bit of light into everyone's trading world. I am available by email. You can always email me at support@daytradetowin.com. Thank you, NinjaTrader. Wesley, I'll turn it over to you. Thanks.